All right, welcome to Coffee with Markus. This is episode 59. And today we're going to talk about the markets, what is happening here, and we're also going to talk about credit spreads. So, we're going to talk what are credit spreads, why should you trade them, and when does it make sense to use them? Now, if this is your first time here, welcome. Before we get started, let me give you a super quick intro of why I am doing this show. Because here's what I'm seeing. Most people who start trading expect their account to explode. They've seen the ads and emails that promise them to turn $2,000 into $1 million or something crazy like this. And then they start trading and they quickly realize that it doesn't work this way. Does this sound familiar? So, if you're sick of all the hype and empty promises, then this show is for you because my goal is to give you the strategies and the tools that you need to be successful. Because the last thing I want is to see you losing your hard earned money. Now, here's my promise to you I will only show you strategies and tools that I personally use in my trading. Plus, I'm keeping it real. I'll show you all my trades, winning trades and losing trades. No hype, just the fact so that you have the right tools, strategies, and the right mindset because I want you to succeed. And if this sounds good to you, then click on like right now or type yes in the comments and we will get started. Awesome. Just wanted to make sure that we are good to go. So, first of all, before we start talking about credit spreads, let's talk about the markets. Let's jump onto the computer and see what is going on here right now. So, today is Monday, June 29th, and the markets are up. As you can see, the S&P is up 1%. The Dow is up almost 2%. And we'll talk about why that is. The Nasdaq up 0.75%. So what is happening today that is driving the markets higher? Because at first, it didn't look that way this morning. But here we have the economic calendar of this week. So this morning we had a report being released, which was the pending home sales. And as you can see, it was forecasted at 18% and it came in at 44.3%. 44%. So this means that people are buying houses. Now, why would the stock market react to this positively? Well, think about it this way. If you are concerned about the economy and if you're concerned that you're losing your job, you would not buy a house, right? So it shows that consumers are confident that we will get over this crisis, that we will get over this pandemic, and they're hopeful to buy houses. Now, also, as you know, money is cheap right now. We have 0% interest rates, and I just recently looked it up. The 30-year mortgages are at 3.3%, so they're really low, and money is readily available. So this is what's happening. Another thing that is happening that is exciting traders here is if you look at the daily new cases here in the United States, we see it was spiking and now for 2 days it has been a little bit lower. Now, I think this is just a blip from the weekend, but hey, traders see what they want to see. And this is what we are seeing here today. The markets are just skyrocketing higher here. The Dow up almost 500 points today. Now, one of the reasons why the Dow is up so much is because there's a heavyweight in the Dow, which is Boeing. And Boeing today is flying high. Look at this. Boeing is up 13.5%. Why? Because they're doing the recertification for the 737 MAX. Now, if you remember last year, the 737 MAX was the airplane from Boeing that crashed twice and therefore it was grounded. And today they have the recertification flight. It happened just over an hour ago, maybe 2 hours ago. And it seems to go well because this is what's happening with Boeing. Now, Boeing is a heavyweight in the Dow, and this is why it is up so much. But hey, look at Boeing. What a crazy stock. Let me just show you. Here, within a matter of days, as you can see, Boeing skyrocketed 50%. It went 50% higher and then came all the way down 50%. So if you look at this, 13% is really not that much when it comes to Boeing. Now, before we talk about my specific trades that I'm doing right now, and also before we talk about credit spreads, what they are, let's talk about some other stocks that made headlines today. One of the stocks is Nikola. I don't know if you heard about them. So they are also producing electric vehicles. And today they started pre-selling their Badger. Let me show you what this looks like. So this is the Nikola Badger here, which is an electric vehicle, 0 to 60 miles per hour, 2.9 seconds, 980 foot-pound torque, up to 600-mile range. So this is what it looks like, and they are starting to take pre-orders today. So they have been flying high this morning. Right now, as you can see, they're pulling back a little bit, still up 7% here, but this is one of the companies that is making headlines today. Now, the third company that is making headlines today is Facebook, because here is the surprising thing. You might have heard it on Friday. Facebook plummeted 8%, and this morning it didn't look good. It was down as much as 5%. Why? Because advertisers are pulling out of Facebook, and they're asking for more oversight of the posts that are appearing on Facebook. As you know, Facebook thus far has had the stance, hey, you know what? We are not responsible for the content. Unless it is really illegal what you're posting, we are not regulating it. Now, this is where more and more advertisers said, no, I mean, you got to regulate it. I mean, against racism, against hate speech, glorifying violence, and all these kind of things. And Facebook right now seems to go in this direction. Anyhow, major advertisers like Coca-Cola, for example, said, you know what, for the next 30 days, we will not advertise on Facebook. So, hey, no idea why they're rallying today. I think it's bad news for Facebook, as for most other social media companies. So if you look, for example, at companies this morning, Pinterest was down right now, also recovering, because Facebook, let's face it, is the 900-pound gorilla, right? Snapchat this morning also down right now after this massive drop on Friday, going up. Snapchat, by the way, is a company that I currently have in my portfolio where I'm trading call options, so I expect Snapchat to go up. Anyhow, so is this making sense thus far? Let me just come back to you for a moment, because I also want to talk about trading option spreads, and specifically because we did it in the previous video, in the previous Coffee with Markus, we talked about debit spreads. So today we are going to talk about credit spreads, because they're super popular right now. Okay, I see that there's many questions. Let me just say hi to you. So Miles said the market is finally moving. Actually, no, sorry. it's Frank who said the market is finally moving. Absolutely. So Adventure said, I checked my trading account this morning. It wasn't magically higher. We'll talk about this. By the way, yeah, there's a reason why it isn't higher here. Anyhow, so good to see everybody here. Yeah, everybody is buying cars here as well. That is true. You see, Jeff said maybe there are people refinancing, not actually buying. No, Jeff, it's really new home sales. It's not refinancing, it's new home sales here. Anyhow, Benito says, thanks for the cup. Love it. I love my cup, because trade what you see, not what you think. Mark says, do you like my pick? I love your pick, Mark. This looks so cool. Okay, taking a sip of coffee here. Okay, so Donna is asking, PXO had 2 signals, PowerX Optimizer, to close pins. Did you close? Yes, I did close it this morning. Now, I want to talk a little bit about the general market conditions, and then we talk about credit spreads here. Let me come back on the screen. Let me show you the SPX, because Adventure said, hey, my account was magically higher this morning. Neither was mine. You know what? Before we go to the markets, let me show you my account. Let me show you exactly of what is happening here in my account right now. So as you can see, the open P&L is around $470, but as you can also see right now, the account, it is a $20,000 account that I started trading a little bit over 4 weeks ago. It has been 5 weeks right now. So it is down, as you can see, $1,200. How come, right? I mean, I've been trading for a long time. I'm really good at this. I know what I'm doing, but let me show you of what is happening here. So if right now you are trading in the market and you are not making money, that your account is just piddling around there, or you might even have a few losses, this is absolutely normal, and here's why. Take a look at the markets. Take a very close look here. On June 11th, which was a little bit over 2 weeks ago, On a Thursday, the markets plummeted. And you see this one very long bar. Do you see this? And here's what's happening. Let me just show you. I'm going to draw a box around this. If I find a box, there should be a box somewhere. You know what? Actually, let me use two horizontal lines, because I want to use a horizontal line right here, right at the top of this bar, and I want to show you a horizontal line right at the bottom of the bar. What do you see? This bar is almost like a measuring bar. And especially if you look at the closing prices, which are these little bubbles on the right-hand side of the chart, then you see that for the past 2 weeks, this Thursday, it will be 3 weeks, we have been trading in this range. Now, I know that there's people out there, because I received the same emails, that are telling you right now, oh my gosh, this is a fantastic opportunity to make money. Well, I know personally several traders. I know really good traders. And I'm trading this. And as you can see right now, I'm not making money. So you might be wondering why I am trading right now when the market is going sideways. Well, because I can tell you this. The market is not going sideways forever. Eventually, the market will break out. And I am positioning myself to be ready when the market is breaking out, whether it is to the upside or to the downside. This is why right now I have 1, 2, 3, 4, 5, 6, 7, 8, 9 positions in my account. As you can see, a little bit less than half of the positions are making money right now. The other half is not making any money. But you see that I make more money on the trades that are in the green than I'm losing on those that are not in the green. So I am ready for when the markets are finally moving. Now, I do not know whether the markets will go to the upside or to the downside. I just know that markets don't like to be in a range like this forever. You know what? I will leave these horizontal lines on there for a little while so that we see when they're breaking out. So I'm trading all my positions according to the PowerX Optimizer. That is the software. Here it is, actually. That is the software that I personally use to find the best trades. And the account that I'm showing here is just one of my accounts. I have a total of 8 or 9 accounts. I really need to take an inventory here right now to see how many accounts I have. Anyhow, it's one of them. It's a rather small account, a $20,000 account. And if you would like to have a copy of my trading plan, be happy to give it to you. All you need to do is go to rockwelltrading.com/coffee. I'll put the link on the screen here. And this way, you can get a copy of my plan so that you see exactly what I am doing right now. Anyhow, hope that helps. So before we move on and talk about credit spreads. Oh, one more thing. One more thing I really want to mention here. Because I told you earlier, why am I not sitting on my hands when the market's going sideways? I told you I'm positioning myself. And somebody really smart and famous once said, you're missing 100% of the shots that you don't take. Can't remember if it was the hockey player Wayne Gretzky or whether it was Michael Jordan. If anybody knows where this quote is from, leave it in the comment. I'm just curious. But have you heard it? You miss 100% of the shots that you don't take. So I rather take a few shots here in this market conditions and position myself for when the markets are finally ready to move. And they will move. Okay, so in a moment, we're going to talk about credit spreads because they are super popular. Many people are interested in trading credit spreads, but I want to explain to you what they are. Do they make sense for you to trade? Why should you trade them? And when should you use them? And as always, I will show you very specific examples. But I see that there's many comments coming in, so I want to just take a quick moment to take a look at the comments. Really appreciate for those of you who are live here. We are live here on Monday, Wednesdays, and Fridays, always at 3:30 Eastern Time, 30 minutes before the markets close. So if this is your first time here and you're new, just type in new in the comments. I'm just curious how many people are watching this for the first time. And if you're enjoying this, do me a favor and click on like. And then we'll move on to credit option spreads here in just a moment. Okay. So good to see everybody here. And Frank says, houses are selling in North Fort Worth. Houses are selling here in Austin, Texas. It is amazing. I mean, people are really buying because right now they can qualify for it. I'm surprised, but again, there's money available. So yes, they are selling. And Frank says commercial building is exploding too. I see the same. I'm right now in the process of selling an apartment complex and buying another one. And I see lots of activity here. Um, so Wayne is asking, curious, are you still of the mindset that PowerX Optimizer works best when the VIX is below 30? When it is around 30 and below, definitely. Because here's the deal. So let's talk about the VIX. What is the VIX? It's the volatility index. And the volatility index is also called the fear index. Let me show you exactly what this means. So the volatility index is usually low. Here it is right now. And today it is at 33. So it is usually low and it is falling when the market is going up. When the VIX is high, this is when the market is going down. So this is why you see that recently the VIX was spiking. I mean, with all the crisis that we had going on with the market crash here, the VIX was as high as, where are we, like 85 or maybe even 90. So this is where you see that there's a lot of uncertainty in the market. And when there's uncertainty, stock prices chop around. Usually when the VIX is rather low, as you can see here on the screen, right? So this is what it was in January and February. This is when you see trends in the market. And so this is why usually, yes, I like to see the VIX below 30. But if you take a look at it right now, it has been hovering right around the 30 mark. So I'm still trading everything that comes my way according to the PowerX Optimizer. Because again, I am sure that very soon we will see trends in the market and I want to be positioned the right way. Okay. So good to see everybody here. Diane is asking, how did you get your chart to fill in below the price on TV? Don't know exactly what you mean. You mean this cool frame? Asia did it for me. So, you know, Asia is my genius video editor. She always takes the segments here out of the video and then cuts them down into smaller videos to make it easier to watch. Anyhow, let's talk about credit spreads. We can actually go to full camera. Actually, let's leave the footer on here. That is okay. Oh, I wanted to prepare something. Let's do this because I want to show you some very specific examples when trading credit spreads. Okay. So let's talk about credit spreads. What are credit spreads? Why should you trade them? When should you trade them? And I will show you some very specific examples. Now, one of the things that I want to do is I want to compare trading credit spreads to just trading outright puts, for example. So, and here we want to use an example of Boeing. Now, credit spreads, first of all, mean that you are getting a credit. So you're getting money. And you see, this is why they are so popular. Because some people say they are like paychecks that you receive every week. That is not necessarily true. And I will show you today what you need to know when trading credit spreads. But credit spreads are very similar to selling options. And today I want to use the example of selling a put option, because when you sell a put option, you're also getting a credit. Money is being deposited into your account. And now you need to make sure that you're not losing it. And for today's example, I want to take a look at Boeing, because Boeing is a stock that everybody has been talking about. So let's say that Boeing right now is trading, as you can see, at $192. And let's say that you're bullish on Boeing, meaning that you expect Boeing to move higher. And you expect Boeing not to move below 160. And this is why you would sell a put at a strike price of 160 and saying, I think it will stay above it. Because by selling this put, you will collect a premium. This is the paychecks that they tell you that you will get anyhow. So you will get money deposited in your account and you're going to keep it if Boeing stays above this strike price of 160 until expiration. So let's take a look at this particular trade and let's see how much money we could get. So I'm looking here at Boeing. This is a Tastyworks account that we are looking at. And let's say we're going out to August. There we go. Let's say we're going out to August 21st, okay, in this particular example. And I did an example earlier, so let me just remove this here for a moment. And now let's say that you want to sell the 160 put. So here we go. What would happen is for every one put that is being deposited, I'm changing it here to $8 and log it in, $800 are getting deposited in your account. Why 800? Because options trade in 100 packs. So let's write a few things down. We're talking about a very specific trade, and we are selling here in Boeing, we are selling the 160 put with an expiration of August 21. So first of all, the maximum reward, what we are getting is $800, right? So how much of the margin does it take? I'm using a margin account here, and as you can see, for trading one option, my broker requires me to have at least $1,610 in my account. Otherwise, he will not let me sell this put. So let's write this down. So the buying power required is $1,610. Now, let's talk about the max risk. Here is the challenge when you're selling puts. So let me just bring up this again. When you're selling puts and the prices of Boeing are below expiration, you have to buy Boeing at $160. Now, Boeing could, in theoretically, it could go down to zero, right? So this means that here you see the maximum loss could be almost $16,000. You see it right here, $15,200. Why $15,200? Why not $16,000? Well, because you're getting $800 and the money that you receive stays in your account, right? I mean, nobody takes this away, but if you're getting assigned Boeing at $160, and again, for one option, you're always getting assigned 100 shares. If this is unclear to you, I have an Options 101 course. I'll link to it in the description. Watch the Options 101 course so it becomes clear of why we are talking about $16,000 if one share would only trade at $160. But again, they come in 100 packs. So you could lose $15,200. So let's write this down. So the maximum risk is $15,200. And now you might say, why should I do this? This seems to be incredibly risky. Well, here's what you see. The trading platform tells you the POP, the probability of profit, is 74%. So it is actually pretty high. So let's take a look at the curve so that we see exactly of what is happening here. You see the maximum reward. I wanted to lock it in. There we go. I wanted to lock it at 800. The maximum reward is $800, and as the stock price goes below the strike price of 160, you start to give up some money. So where exactly is your break-even point? Your break-even point is exactly at $152. Now, how did we arrive at this break-even point? Let me just bring up my handy-dandy notepad here. So it's $152. Very easy. It is your strike price of 160 minus the premium that you receive. In this case, $8. So therefore, the break-even is $152. Now, here's another thing. How much money do you need to have in your account when you're getting assigned? So when you're getting assigned, you have to buy 100 shares at $160. So 100 times 160, it means that if the stock price goes below 160 at expiration, you might need $16,000 in your account. Okay, is this making sense thus far? let me know if this is making sense. Give me a like or type a yes in the comments, because then we'll talk about a credit spread and why they are so popular amongst traders, or why many so-called educators are making them so popular. Okay, I see that this is making sense, that there are a bunch of likes and yeses. So let's move on and let's talk about a credit spread. What exactly is a credit spread? Well, it means that you're still selling the 160 put with the expiration of 8/21, but at the same time, you're buying a put at a lower strike price. So in this case, we will buy a 155 put. And let me show you what exactly this does to our trade here. So first of all, we go back to our trading platform. We go back to the table, and we are now buying a 155 put. The first thing that you might notice is that no longer do you get $800 deposited in your account. You only get $130. Now, why is this? Because out of the $8 that you receive for selling the put, you're now paying $6.70 to buy the lower put. So why in the world would you do this? Well, let's take a look at this. So first of all, the margin, let's actually take a look at this. The margin dramatically went down. Margin means how much does your broker requires you to have in the account right now as you put on the trade, not at expiration, right now as you put on the trade. And it is only $370. Okay, that is not bad. So let's go to our handy dandy notebook pad and say 370 versus the 1,610. Not a big deal, right? The maximum reward went drastically down. So instead of $800, it is only $130. And you might say, that doesn't make sense. Why is it only $130? Well, here's why. Because your max risk is also capped. And as you can see, your maximum loss right now with this spread is only $370. Now, the probability of profit is slightly down at 69%, but let's just write it down. Your maximum loss is capped to $370. Now let's take a look at the break even. Where exactly is your break even point? So when do you start losing money? And we are going back to the platform here, going at the curve. And here we see that you start losing money at 158.70. And again, how do you arrive at this break even point? Let me just write it down before I forget it. 158.70. Well, you take the strike price right here minus the money that you receive, $1.30, and this is why it is 158.70. So here is why people like to trade credit spreads. First of all, as you can see here, they have a pretty high probability of profit. Here you can see almost 70%. And you see that the risk-reward ratio is not bad at all. You can make $130 risking $370. Again, the $130, as soon as I click review and send, the $130 will be deposited into my account. And this is the misleading part. This is where many so-called educators say it's like a weekly paycheck. No, it is not, because you still have risk. You need to make sure that Boeing stays above 160 until expiration, which is 8/21. And right now, this is how many days? 53 days from today as I'm recording it. Sorry, I want to switch over here. So you see, it's 53 days from recording. So you need to make sure that Boeing is staying above there, so it's not as paychecks. Now, here is the very, very dangerous thing that very few people are telling you about. And this is why I wanted to do this segment here today, that I tell you what to look out for. The really difficult part, let me go back to my notepad that I can write it down. Okay. Danger if prices are between 160, this strike price, and 155 at expiration. Because here's what happens. at this point. You're getting assigned, so it is almost like selling a put, like selling a naked put. The good thing is you have to buy the stock for $160, but you're allowed to sell it at $155. However, you need to make sure, okay, you must close the trade before expiration. Otherwise, you can get assigned. So in a moment, we'll talk about when to use it, when is the best time to use this. Otherwise, you can get assigned. And this is what recently happened to a trader called Alex Kearns, who in his Robinhood account suddenly saw that he got assigned because he thought he was protected and he wasn't. And suddenly he saw that the broker demanded, at least that's what he thought, more than $750,000. And he said, I'm a 20-year-old kid, I don't have it. And very tragically took his own life. So make sure that you understand what is happening and make sure that you close this trade before expiration. So when do you use a credit spread? You use it when you're slightly bullish. Because what does it mean in this particular example? You want to make sure that Boeing stays above 160. So as you can see, they're trading at 194 right now. They don't have to stay at 194. They can go down to 180, to 170. They can go down to 161. As long as Boeing doesn't go below 160 at expiration, you are fine. So just to sum it up, first of all, what are credit spreads? Credit spread means that you're selling an option and at the same time buying the option at the same expiration, but a slightly different strike price. Therefore, you're reducing your margin requirements, you're reducing your reward, but you're also reducing your maximum risk here. You should use it when you're slightly bullish, and always, always make sure that you close the trade before it expires, even if it is at the day of expiration. Hope that this video helped and make it clear. I have other videos. One of the other videos is talking about debit spreads, and you might want to watch it. So there's some videos hopefully popping up on your screen right now. Just click on any of these videos that make the most sense to you, and I'll see you in the next video. All right, now you know the drill. This is the part that Asia will edit out so that we have this as a standalone segment, which hopefully is around 10 minutes. And now you know what credit spreads are. Was this helpful? Let me just ask you if this is helpful, because if so, do me a favor and click on like. This way I know whether this is helpful. By the way, if you are right now on your mobile phone watching this, click on X on the chat. So you see a chat right now, and then you can click hit like, and then you can say turn live chat on again, and the live chat will come up. Okay, so also want to talk about debit spreads, because I will be using debit spreads, and we'll talk about this in a moment. I'll tell you exactly how and when I will use debit spreads. Okay, Alex says it was Wayne Gretzky. Paula also said it, Wayne Gretzky. Marisol thinks it was Michael Jordan who said you miss 100% of the shots that you don't take. Okay, not quite sure. It seems that more of you think it was Wayne Gretzky, so I believe it was Wayne Gretzky. Good. So good to see you, Ned. First time here. Very nice to meet you. Tanya, first time here. Nice to meet you. Brandy, same for you. Did you find this helpful? Is this, I mean, trust me, when you're watching more of these videos, it'll become easier to understand what I'm talking about. Sometimes I'm using very easy subjects and sometimes a little bit more advanced subjects. So today I want to say it's an intermediate subject, not really for beginners, but hopefully helps you to know of what you're getting into when you're trading these so-called option spreads here. Okay, so let's see. I see that there's a bunch of questions. Yes, very clear, helpful. Okay, good. So Don says, it is absolute my favorite strategy. Okay, great. I mean, if you know what you're doing, this is can be a very profitable trading strategy here. Okay. So Honest Quester said TD Ameritrade would have closed the trade for that guy before the close on Friday. Every broker is handling it differently, right? Usually when you're getting a sign means that the stock will hit your account on Monday, but then if you don't have enough money in the account, the broker will sell the stock right at the open on Monday, maybe even during pre-trading. So it really depends. Alex says, so if you get a sign, you just sell it and take a loss. Avoid assignment at all costs. Now, here's the important thing. I did do a video on options assignment. I'll post the link in the description. It is really important that you understand it. You only get assigned if the stock is below the strike price on or maybe a day before expiration. As long as there's still some time left until expiration, you are good. Again, I explained this in detail. And we'll link to the video in the description or in the chat here. It's called Option Assignment Explained or something like this. We'll link to it. Please watch this because there is this misconception that the stock only has to dip below 160 and you get assigned. That is not the case. So until expiration, let me just bring it up here. So Boeing can dip below 160 before August 21st in this case. Only if it is trading below 160, I want to say maybe on August 19th, 21st, then you go into the risk of assignment. So if it is really trading below, I would close the trade and then, yeah, you take the loss, right? And otherwise, close it before. But don't get assigned. Don't get assigned. That is my advice to you. And trust me, it will save you a lot of headaches here. Donna is asking, why so far out for expiration? I just used here an example. So this is not an actual trade that I'm putting on. I just wanted to show you an example. We could do it with 3 days out, right? And you will see it will be very, very similar. So Donna, doesn't really matter. So Jax is asking, what if it goes to 120? Jax, it really depends. When you have a put, so let's talk about this here for a moment. So if you just have a put, writing it down here. Oops, there we go. So scenario 1, you only sold a put if it's 120 at expiration. Before expiration, doesn't really matter. But if it is at expiration here, then you have to buy 100 shares at $160, and now you sell them at $120. So this means that you have a loss of $40 per share. And since options are trading in 100 packs, this means that you would lose $4,000 on this trade. Now, if you traded the credit spread, okay, in this case, you would only lose the difference here, and this is $370. We talked about this, right? So this is where you see here. If it goes lower, you are limited to the $370. That is your max loss that you could possibly have. Is this helpful, Jax? Okay. Good. Guys asking, do I need to subscribe to the Interactive Brokers and TradingView real-time streaming market data? If yes, which one of them, or maybe both? So here's the deal. I have accounts with Interactive Brokers, and yes, Interactive Brokers ask you to subscribe to market data, and they charge you for this. This is why recently I opened an account with Tastyworks, because Tastyworks gives you real-time data for free. So I like this. If you would like to learn more about this, go to rockwelltrading.com/tastyworks. We'll post the link in the description and here in the chat, rockwelltrading.com/tastyworks. This is where you learn more about Tastyworks, and they offer me free real-time quotes. So I like this. I personally do have a subscription to TradingView, and if you would like to see what subscription I have, go to rockwelltrading.com/tradingview. See, we're making it easy for you. We're putting the link in the description here and also in the chat, rockwelltrading.com TradingView. So I do have the pro version. I can show it to you really quick here. Let me share my desktop with you. Let me show you my exact account here, so that you see. There it is, account and billing. That's okay. So I have the Pro Plus plan. You only need the Pro plan, and then as you can see, in order to get real-time data for the Nasdaq, it is $2 per month, and in order to get real-time data for the New York Stock Exchange, it's an additional $2. So once you have a subscription to TradingView, I believe that you need the Pro version in order to get real-time data, but then it's only $4 for the New York Stock Exchange and the Nasdaq. And I want to say that probably 90 to 95% of the stocks that you're looking at are traded on the New York Stock Exchange and the Nasdaq. Okay, does this help, Guy? Okay, good. So Ned is asking, do you need to close both the buy and the sell put at the same time? You don't have to. I recommend that you do it, because if you only have one, then you suddenly have a naked option, and this is when these problems can happen. See, if, for example, you only close one, then you're suddenly short the 160, so it would be the same as doing this. So it's a great question, but I would say either the whole trade works out or it doesn't, and I wouldn't make it more complicated. Now, I know some people, if you're more experienced, you can leg in and leg out, no problem with this, right? So you can do this. I would highly recommend that you close both the buy and the sell at the same time. Okay, so Kieran is asking, do you recommend a strike price reduction for spreads that is different from selling puts? Not quite sure if I understand the question here. So ask again, slightly different, and I'll take a look at this. Okay, so Rob is asking, once you close the BA spread at any time before expiration, you make the profit. No, not necessarily. You see, every day you have something so-called, which is time decay. And I did a video on this, Rob. We will link to this in the description. It's called theta in options, or time decay in options. So I explained it in detail. Basically, it means that every day that the stock stays above your strike price, you make a little bit of money. I can, yeah. It's in this video. I show you very specific examples. So if you're closing it before expiration, you probably cannot keep the whole $130. So you have to buy it back. So out of the credit that you receive, you have to give some of the money back, right? And this is why you might only make $100 or $120 or $80, right? Also here, the max reward is $800, meaning the max reward is if you hold it until expiration, and at expiration, the stock is above your strike price. Does this help? Okay. Good. Don says he's watching this here today on my mobile, floating in the pool. Good for you. Okay. Good. Okay, so Sama is asking the question that I absolutely want to answer. So, can we use PowerX Optimizer for debit spreads? I did a class, I did a video on debit spreads just a few days ago. So if you haven't watched it yet, we'll post a link in the description and also in the chat box here to the video on debit spreads. And yes, you can trade them with PowerX Optimizer. So here's what I told the team to do. This weekend, for 4th of July, we will run a special on PowerX Optimizer. So PowerX Optimizer will be deeply discounted. So usually the software sells for $4,997. But for 4th of July, we will run a special. And it will be deeply discounted. I don't know yet for how much. But the team will let me know. That's what I let the team decide. They are much better at this. And as a bonus, Mark is my head coach, Mark Hodge, and I will teach you how to use PowerX Optimizer and debit spreads. If you already have PowerX Optimizer, you will automatically be invited to this class. This class will probably be 90 minutes. I think it will be 90 minutes. So it will be not the shortest class, but not the longest class, because I want to show you exactly what to do here. And if you're interested in this, I do believe that the team has a wait list. Team, do we have a wait list for those who are interested in this special? And again, if you already have PowerX Optimizer, you don't have to do anything, because you will automatically be invited to this class, and the class will happen next week. Haven't decided yet when exactly, but we will let you know. If you're interested in the special that right now the team is putting together, bundled with the class of to do exactly what Sama says, and also Kartik, who is asking, will there be any 4th of July offer on the software? Yes. So we do have a link. It's called rockwelltrading.com/freedom. So if you go to rockwelltrading.com/freedom, you can put your name on the list, and we will send you an email as soon as we have the details. And it will be a bundle of the PowerX Optimizer at a very deeply discounted price. At least, I'm thinking, probably 50% off. After all, it's 4th of July, right? We'll see. The team might decide differently, but we're thinking about 40 or 50% off. So it's a pretty good deal. And we'll bundle in this class where we show you how to trade debit spreads. That's not what we covered today. What did we cover today? Credit spreads, exactly. But in the previous Coffee with Markus, and we link to the video right here, we talked about debit spreads. And yes, you can absolutely use debit spreads together with PowerX Optimizer. We'll do a class around this, and we'll let you know. So if you would like to get on the list, please do me a favor and go to rockwelltrading.com/freedom. We'll probably announce it in the next couple of days. So today is June 29th. I'm pretty sure that we will announce it on July 1st. So give us a couple of days to put the offer together, so that Mark and I also can look for a date of when we do the class. And if you can't attend time for a coffee. If you can't attend the class live, it will be recorded, and the recording is available for you forever. Okay. So the class will be probably in the evenings to make it easy. So for our mastermind members, we have live trading next week. So this will be in the morning, and the other one will be an evening class. Okay. I know we went a little bit over time. Usually we go 45 minutes. Went a little bit longer today, but I think it was an interesting subject. What do you think? Was this interesting? Did you like it? If you haven't hit the like button yet, do me a favor. If you enjoyed this topic, click on like, because this way I know which videos you enjoyed best. I will be back on Wednesday, because this show is on Monday, Wednesdays on Friday, 3:30 Eastern time, 30 minutes before the market close, because this way we can take a look at the market, see what's happening. We can do live example. We can take a look at my account so that you know exactly what trades I'm taking. And you have seen it. I'm showing you the winning trades, the losing trades, whatever I'm trading, right? I have been trading for a long time. I'm really, really good at it. And still I have losses. Why? Because losses are part of the business as a trader. And I keep my losses small and let the winners run. And this is what I'm showing you in these sessions, in this Coffee with Markus. Hope that you enjoyed, and I'll see you again on Wednesday. Take care, everybody.